Hi, I'm Catalina, coming to you from Loan Sense. Today I want to talk about the number of student loan borrowers that are currently entering the mortgage market, as well as the archetype of who these student loan borrowers are, and why knowing this as a lender can be very helpful to helping your customers be able to actually get to closing, and what are some of the guidelines around them, around the student loan and mortgage guidelines that could help you consider how to get them to closing, okay? So you can qualify more loans with the current ad spend or lead spend or the method of getting your customers you are without increasing it. How do we actually qualify more individuals, especially since 65% of the first-time buyer market now has student debt. So in 2020, 3.2 million loans were from the first-time buyer market. Of course, we know the majority were refinance. There's going to be a little influx now going more towards a purchaser market. And of course, the number one purchasers are millennials, and we carry a huge amount of student loan debt in terms of the percentage of our generation, not necessarily in terms of the amount each one of us hold. And I'm going to break down that archetype in a second. So 2 million, about 65% have student debt, and about half of those have an opportunity to actually reduce their student loan payment and use federal, state, professional-based programs to reduce their payment, or they can qualify to refinance their home or take additional cash out to pay down their student loan, and they may be a good candidate for that as well. And either way, those are opportunities for us to provide value as lenders to consumers. Now let's just break down what the archetype of this student loan borrower is so we can understand who they are. So really briefly, we break down the archetype into three main groups. And again, I know I'm generalizing and not everybody falls into these groups, but this is the easiest way to think about people and to think about how you as a lender can group them and therefore understand how to help them, okay? First and foremost, what we hear about in the media all the time are these professional managerial class that carry so much student loan debt, but they also have higher earning power, right? I'm talking about the doctors, the lawyers, the MBAs. It's actually a low percentage of the population. These are individuals who may be great candidates to refinance their home, pay down one of their loans, and use the equity in their home and take out a 3.5% mortgage loan in lieu of holding a 7% student loan, right? That can also apply actually to parents who are holding on to Parent Plus loans that are like 8% interest, right? So I want to put that here. If they're high earning, have equity in their home, they can actually do that, right? Fannie and Freddie allows for that. Then of course, but however, that's a low percentage of the population. And like I said, the majority do not have degrees, and they fall into this population that's originated under the 40,000 mark. The average is 40,000. But a lot of these individuals did not graduate school, are currently in school, non-traditional students, and do not have the earning power of a college graduate, okay? This is also the population that is more likely to be in default, in wage garnishment, or in bad standing with their student loan debt and really need to figure it out so they can improve their credit and close. We can help those individuals here at Loan Sense. There's a lot of decisions they need to make around their student loans to get into good standing, as well as paperwork filing that we can liaise and help borrowers achieve results of being unqualified to now being able to qualify for a mortgage, okay? And then of course there's this middle group right here, and this is the undergraduate that graduated, as well as the low earning master's degree students, and that comprises of like teachers, social workers, nurses, people that are really vital to our functioning of our society, and took out quite a bit of debt for their earning power. I would say something upward of like 1.5 to 2 times the amount of student loan debt as compared to their income, okay? This is a population we serve really well as well, because these two demographics here don't have a degree and have under $100,000 of debt is primed to use federal programs to help manage, whereas this professional managerial class with higher earners is great to consider refinancing or taking cash out of their home and actually paying down their student loans. So if you want to know how Loan Sense can actually help you so that you can qualify more consumers who are coming to you with student loan debt as an issue, please contact us at sales@myloansense.com, and we cannot wait to help your clients so that they can get to closing and achieve their dream of home ownership. Thanks.